Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin dropping to the downside, not getting a retrace, but giving nearly everything back from that impulse out to the 382 of this diagonal pitch fan we had priced in for some time now. Let's go into high block to see what was triggered in the liquidity. And what is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are in the charts using high block capital. So if we look at that now, we can see with this, we were talking about these pools down here for the retrace idea, which coincided with the golden pocket. We were talking about, come on now, we were talking about this $400 million pool down here. We were talking about this $400 Come on. $428 million 100x pool down at 26,573, and they came back to that without hesitation.
Fatality.
And they not only came back into that, but they took out their 50x partner in crime and then some, as they took out the entire range. Did they go down to this 25x character? Let's go down. Let's go back to things as displayed, and it looks like they did. So they took that entire $428 million out, and now we're back to where we started, and there is more pinged in to the other side of the equation now, to the tune of $227 million. They first came back for the 100x on this side. They took out the 100x into that spike there, and then they came back into this pool of 157 million. Now the 227 million partner in crime of 50x is still on the table, as is all these little shorts which opened up as we dropped. So they could just as easily retrace back into this. There is a Narn Farms payroll news catalyst which should bring some volatility, more than there was here for the Friday trading session in New York. So we'll see what can be done. As it stands right now, currently, after that little bit of happiness, we have $14 billion imbalance to the upside now in terms of short liquidity. Can we see a bounce off this level? This is an interesting idea. It could be setting up for some sort of downside play. We did talk about the liquidity on the higher time frame being imbalanced to the downside, so watch out for that on the higher time frames. On the 7-day time frame, they took out this entire range and could be coming lower to the 25.2 area. Let's go and make sure this max liquidity is being displayed to the tune of that 10 billion down at 25.2 and beyond. All right, so looking at the monthly imbalance is still to the downside, ever so slight at that 23.6 and below. This is also seen on the 3-month and the 6-month, as you see here in the external liquidity range. $180 billion down at 24.3 and beyond. So do they come down to that region? It's entirely possible at this point, having given back all the gains from the start of the week. On the highest time frame, you have $233 billion down at 23.6. That is right for the taking. The monthly candle close, so we'll go take a look at that real quick. Let's do that on naked price action first. So we have the monthly candle close. Let's go ahead and see. It's going to close in another hour and 26 minutes. As of this moment in time, it is a bearish engulfing of the previous candle, and this most likely combined, if we take this entire 10%, is that inside of it. Pretty much the entire 10% upside of this body is included in this point of control rejection here on the monthly time frame. Are we going to get a close that is bearish? If that is the case, what does that mean for Momentum Masters monthly stochastic? The stochastic RSI is showing that we are overbought in terms of the stochastic RSI. The money flow is slightly above the RSI on the monthly time frame. Now this will update in the next hour and we will see these values change, so it'll be interesting to note, does this rising sun event back in June negate itself? We never saw some follow through on the momentum. These did not open up, and most likely with that bearish engulfing, these will cross back down for a potential double bottom on the Williams. So that is something to note. If we look at the regular cloud here, cloud is beginning to taper as we have this surge up here in the monthly cloud, as there is less buying volume here as this sell-off begins. The thickness that was ensued up here has now started to taper. Of course, this is a monthly time frame. So until you can reclaim this and take off above that level at 32K, you would not be seeing this bull market on the monthly time frame until we start to reclaim this cloud. Now this cloud is obviously on a higher time frame, so this is not for something to see, something immediate. It is a subtle thing that you would have to reclaim months later into the bull as we start the halving, I would imagine. So if we look at the 5-day is 2 days till close. We'll look at that later. The 3-day is going to close in the next hour and 23. This cross down event has proven to be quite strong on the baselines. What are the baselines, you say? Well, link is in the description, of course. You can scroll down to the features and toggle at your leisure everything, or you can read about each component. Like the baselines, your first sign of reversal. So this was your first sign back in July 24th on the 3-day time frame. Previously on April 16th, we had a 60-day downside event. So these suppression events on these higher time frames do happen to play out with a fury. So we're seeing that with the 3-day. This stochastic already oversold, money flow slightly above the RSI, coming down possibly with the Williams here on the stochastic reset in an hour and 23. On the daily time frame, we got this move to the upside, which was sharply negated yesterday. So this rejection at the bearish super trend level is proving to be accurate, as well as that stab to the cloud and the adaptive and weighted moving averages, and getting this possible larger daily time frame double bottom. But how deep of a retrace can you get in this? Can we go down much lower? Is it going to make some 2 double top 𝗥𝗲𝗃 event and go back down again? Let's take a look. The money flow and the RSI is not proving to break above that 50 level just yet on the daily time frame. Baseline still holding as we go lower. The 22-hour time frame also attempted to hold here. We were looking at that last live stream about the retrace into the pocket. We did not expect to go that low, but they did give it all back, and you would have had your first sign on the 4 and 6 hour cross down events. So the 4-hour had you before this one. So as it stands right now, we are seeing a confirmed cross down of the 6-hour, which may continue forward into this momentum to the downside. This previous 4-hour cross down event is what we were looking for when we were talking about a retrace into this pocket. Oh, we're on the wrong chart, so we'll go where we marked it. So we marked off these regions, and we were talking about a potential golden pocket reaction into these liquidity pools off of this cross down event, which it proceeded to give back all of. So this deep retrace has now turned into negating the entire impulse here, so we'll go ahead and delete that. Also, these reclaim pools we just bid adieu to because they are now off the table. And where do we stand now with the 4-hour time frames? The 4-hour time frame baselines crossed down confirmed, as well as the 6-hour. So these signs of abating are not yet clear. Seeing this, when we saw this confirmed 6-hour above the cloud here, we were talking about the idea of going long on Tuesday. This met our expectation and then some. And then we were talking about this, how if we came back to this region, you would have to hold a candle close above the 236, which we did not. So we saw that downside ensue. So this bullish idea is needing to be reassessed here. The cloud was negated and not respected at all on the 6-hour time frame. And the 4-hour cloud also being disrespected here. 4-hour stochastic is breaking down to a oversold region. The volume tapering off here in terms of selling volume. Do we get some sort of reaction on the lower time frames? Let's go ahead and see. Got Got a nice buyback wick on the hourly as we start to approach this monthly candle close and the requirements they're setting for their close criteria. So the baseline's not closing, possibly closing beneath the hourly here for an hourly scalp. You don't have the 4 or the 6 hour in your favor, as well as the 12 hour rejection, and the baseline's not in support until you can close a candle above this cloud. So this is a deep retrace and not the opposite of bullish, so it is a bearish candle as we speak. So are we going to see some retrace? If you just zone out of everything and just look at this 15-minute thing, you could see a little bit of a scalp into the liquidity, and you build your narrative structure out. The liquidation points of those shorts, 26,436 is that $227 million pool. 26,436 would put you up here. 26,436 puts you in the range of this drop down here, and then you have another one looking to be in this region. Let's zoom in a little bit more detail. You have a 100x pool at the top of the range at 2733, so we can do that for you. 2733, that'll put you right around there inside that candle, and that's what you would call your fair value gap. So if you would start to reclaim this at all, you could just zone into this, zoom in and see you're getting some bullish divergence on the 15. Is it strong enough with this rising sun event on the Williams to take you out? Can that cascade up to the hourly? The hourly candle close here, starting to reclaim the baseline. Not liking the ambiguousness of these cross down events not confirming alongside the hourly, but you could still see a reaction nonetheless. As we enter the news, let's look at exactly when that news is going to stand to kick off for that non-farm payrolls an hour prior to the open of New York session. So you'll get this an hour prior to the New York open, and then you have some other PMI stuff 30 minutes after the open. So this should be an interesting Friday, as it is Run for Profit Friday, and they are clearly running for profit on both sides. So this could have cleared the longs for a potential true impulse to the upside, and also cleared the shorts. So they've come back to ground zero and taken out both sides that were hoping for short and hoping for long, and now we're back to square one. Kind of interesting how Bitcoin goes sideways for so long and then immediately surges up and immediately gives it back, proving the liquidity grab trap-like nature of the markets. And you have to always beware and be aware of what's going on. So let's go ahead and take a look at total. Total also giving back a lot. Our projection of that downside retrace was going back with a fury from that level all the way down to the 2 level. So it did not react off this impulse at all, but it did go down as we projected. The total 3 also going back to the 1618 region. Your USDT dominance, we expected a hit to the USDT dominance, but not in such strength, and it did. And the BTC dominance dropped down, so there was less strength in all cryptocurrency markets. If we look at the dollar yen, the dollar yen bounced before reaching that level, basically at the low here, the range low at this zone here, going slightly lower and bouncing out from there. Is it going to fatigue out is the question. One thing I was talking with a few members and my dad about was the VIX being heavily suppressed with no reaction recently. So this VIX in a rocket ship potential. When this goes up, markets tend to go down. So they've been manipulating the VIX from having some sort of market reaction. It's at a relatively all-time low here. If you go back in time, the last time is December 2019-ish. So the last time we had something like that was 2020 with the COVID reaction. So this VIX, February 2020. So we could be seeing some sort of reaction of the VIX. I believe the VIX is volatility, and when it goes up, it stands to have the assets of the markets go down. So my dad is of the mindset that it could have some reaction down into the regions, a violent reaction down below. The ES basically holding this range, getting a cross down event of the 6 hour. The 6 hour previously giving some decent reactions. NQ also getting overbought here as we reach up into some monthly fair value gap levels. Are we going to come back down with the fury to this downside? Was this all they could muster, or are we going back into some of these levels up above? Dollar yen looking to cross up potentially on the 6 hour, which could cause the downturn of a lot of the market. Looking at gold, gold is holding relatively steady after the previous rocket ship 2 weeks ago. Let's go ahead and see what you guys are talking in the comments. SEC delays all ETFs. Ah, that's some news. That's one reason why it was premature on that grayscale. So they delayed it, and the hopeful guys got stopped. So in terms of just a retrace to grab some of the liquidity and get, so basically before we think about going, just what type of reaction do you have at this adaptive in this pool here? This is what you would look for next. Next on the menu, hourly play cascading to a 4 hour. Yes or no? Is it going to do this or continue to go even lower? So you'd be waiting for a reaction off of one of the liquidity pools of this range. And what does this bearish super trend give for the 15-minute? 15-minute baseline cross up still in effect here. Does this 15-minute cascade over to the hourly? You got the bullish divergence to support it. So let's find out. I gotta get ready for the day. I hope that was a short and sweet update for you. We'll see where we stand on the non-farm payrolls in later this evening for me and morning for Americans. And do we see this reaction? This is a mighty thick cloud to reject to, so you'd have to see some conviction for that continuation play. So how much does the hourly give in terms of a bounce into the liquidity of the longs here to this pool or beyond? That is the question. Looking at one last time at the monthly to confirm, to wrap it up in a nutshell. The monthly time frame does have a little bit of double digits up at 28.5, but the majority is down below at 23.6, so not looking so bright for upside potential. This could have just been a liquidity grab for continued downside, but they will still stop out some measure of the shorts most likely before continuing lower. If it is bearish, it will not take out more than 50% of the range in order to allow the trap traders to not get out of their trade. So you'd be looking for equilibrium reaction. That's funny how that became that exact point. You just learned to see where that equilibrium is. So going to the equilibrium, getting a reaction off the equilibrium of this impulse to the downside at 26,623. And that's my story, and I'm sticking to it, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in. We'll do the same, bringing the fire, the accuracy, the